Here we go. Hear it. Hear it. Let's see. How's the volume in here? Are we okay? Hopefully we're okay. Let's see. How's the volume in here? Are we okay? Hopefully we're okay. Let's see. How's the volume in here? Are we okay? Alright, we're looking good. Hopefully we're okay. Let's see. How's the volume in here? Are we okay? Alright, we're now let's see here. That's weird. Whatever. Let's get going. The current resolution. Should we really change it to that? That sucks. Well, we can't now. We'll do that later. All right, so let's talk about it. I am in Bitcoin longs despite the entire crypto Twitter being bearish, right? I remain bullish, and the reason why I'm long, I am already long, brother. I am already long, despite most people telling me I'm crazy. So here's why. Okay, so a lot of this analysis here is based on the underlying macro environment, right? But of course, we use technical analysis to time the entries. And again, so what this is, right? This is what I like to call my golden zone, okay? And it's a Fibonacci extension tool, drawing it from the low of the range to the high of the range, which in this case is the all-time high. Now, it comes in two zones, right? We have the 71 and the 79%. Now, I entered based on the last one that you're looking at here. Also overlapped quite well with a discounted demand area. And that's basically the technical analysis behind it. Glitching. Are we glitching? Let me see if I can fix it. What's going on with glitching? Can we elaborate, brother? Is that possible? Oh, it is glitching a lot. What's going on? It might actually be because of the resolution, it tells me. That is interesting. can't really. I can't really, unfortunately. Let's see here. All right, 1 second. I have to, I don't know if this will stop the stream, but I have to change the settings. That's why it's glitching out. Image stuck. Okay. Thank you. Thank you, brother. There always has to be technical difficulties, huh? All right, let's do this. Oh, thou knows. All right. Let's see if this fixed it. If anyone in the chat could let me know. If there are anyone, of course. So we can get goddamn started. All right, let's see for test purposes here. Are we good here? Are we glitching? Or are we showing it all right? I think it looks good, no? I think we're here now. I think we are here. I think we're all right. How we looking, boys? Oh. Let me know. How are we looking? Is it glitching? Are we good now? That's what I'm wondering. I think we should be fine, right? Okay. I'm getting feedback that it is fixed. Let's just run with it. Okay, so yes, I am long. And I am long primarily based on the macro environment. Because again, these are long-term positions. They're not, intraday trading whatsoever. And as you guys can see, Bitcoin is absolutely ripping right now. Donald Trump is speaking as we speak. So perhaps he is he's saying some good stuff, which is making Bitcoin go parabolic. I'm not complaining. Anyway, so the technical analysis behind this play is quite obvious, right? I use two primary zones whenever I trade using the Fibonacci extension tool, and I call it the golden zone. It's the 71 and the 79%. You draw it from the range low to the range high, which in this case is the all-time high, and you get these two zones here. Now, they are highly probable reversal zones, right? And so I entered based on the last one. Why? Because it overlapped very well with this discounted demand area here. And so far, so good, right? Unfortunately, as you guys probably know, if you're trading Bitcoin yourself, we have not really gotten the move above this resistance level as I would have wanted. Again, we did break above it, but we came down again very, very fast. Now, why did we come down? Probably because of the Trump tariffs, right? But let's talk a little bit more about the macro environment before we sort of jump into the intraday trading here. And why I am, long Bitcoin as a whole and bullish on Bitcoin despite a lot of people being bearish. Look at this. We went from, during this live stream, which has lasted 11 and a half minutes, I went from $48,000 in profit to 55K because Donald Trump opened his mouth. Isn't that wonderful? Anyway, let's start here, because if you're in crypto, right, especially on Twitter, you were probably fooled to believe that as soon as quantitative tightening ended December 1st of 2025, Bitcoin was going to go parabolic, right? People were talking about this as if we were going to flip the market cap of gold within 2 weeks. Obviously, right? Obviously, let's have a look at the price action. The price action did not reflect what the majority of these influencers were telling you. And there's a very clear reason for that, right? Now, QT has only stopped twice in crypto's history. So let's look at 2019 to understand this a little better. In 2019, it stopped September, right? So in September, QT stopped in 2019. Now, about 200 days following that, we saw boring, choppy, consolidating, and even bearish price action, right? And so it's the exact same playbook as in 2019 that we're seeing right now. It's entirely normal. You see, here's what I'm talking about. Whenever the Fed balance sheet, which is what we're looking at here, is going up, like it's doing here, like very aggressively, it's because we have QE, and that's the opposite of QT, right? So QE is quantitative easing, and that's when they're expanding their balance sheet. They're buying more bonds, and they're providing us with, looser liquidity conditions, which is, favorable conditions for a bull market. Now, the opposite of that is, again, QT. That's when they're shrinking their balance sheet, right? They can do that primarily by letting bonds expire, or they can do it manually, sell the bonds manually, but usually they let them expire, right? And this creates, insufficient liquidity for a bull run to take place. It creates negative expectations in terms of liquidity, which is, what Bitcoin moves based on, right? It moves on expectations, and during QT, the expectations just aren't there, right? They're not. But when QT stops, which it did December 1st, well, then suddenly that opens up with the possibility of the liquidity expectations rising significantly, right? And as I just said, Bitcoin moves a lot based on expectations. So if people have very positive expectations regarding Bitcoin, right, and liquidity, well, then Bitcoin reacts in a very aggressive way. So you would sit there and think, okay, well, QT stopped, right? And so that should raise the expectations and therefore be bullish for Bitcoin. Well, yeah, in theory, that's right. But we have one problem, and he's called Donald Trump. So in case you've been sleeping under a rock, Trump is throwing out tariffs left, right, and center as if it's, quite literally a piece of, a pair of underwear. And he recently imposed a 10% tariff on about 8 European countries, which is probably, why we're seeing this recent sell-off that we have been seeing, right? This one right here probably has to do with the tariffs that he's throwing around. And so he imposed tariffs on 8 new European countries because they're against the idea of him invading Greenland. Obviously, he's literally, planning war against a NATO country. And so he is basically going to keep feeding tariffs to the Europeans until they support him in his idea of invading Greenland. And all of this stuff that we're seeing, right? Him wanting to invade a fellow NATO member and throwing tariffs left, right, and center does not create favorable expectations for the investors, obviously, right? And so that's why we're not seeing these positive expectations that we otherwise would when quantitative tightening stopped, right? But again, we are most likely just following the exact same playbook as in 2019 here. And so what we're seeing now is the economy and the financial markets feeling the after effects of tightening, right? It's entirely normal. Liquidity is still low. Rates are still at 3.75%, right? So what we're seeing here is entirely normal. In fact, this could go on for quite some time here, and it would still be entirely normal. What's your thoughts on gold? Do you think it will have an impact on crypto? Yeah, man, 100%. Actually, we're about to get into that right now. So what we're looking at here is silver, right? Now, a lot of people in crypto specifically are super focused on silver because, I mean, it looks like an actual meme coin, right? I mean, we've just been going parabolic here. And I can tell you this based on just experience. This is not sustainable. Have a look at history, right? So in 2012, we saw something similar, which doesn't even come close to what we're seeing now, by the way. But we saw something similar where silver and gold, for that matter, went parabolic, right? We saw the same thing in the 80s here. But what do all of these, parabolic jumps here have in common? They have just as violent crashes, right? 84% crash in the 80s, 71% crash here in 2012, 2011. And so you cannot sit there and comfortably say that, oh, this is entirely normal, right? This is exactly what we want to see. No. How can you sit there and be bearish on crypto and say it's over for crypto when the trend literally looks like this? I mean, have a look at this market, right? We're creating higher lows after higher lows that follow by higher highs. I mean, this is the healthiest uptrend that I've ever seen, right? A healthy uptrend, guys, it has pullbacks. If it doesn't have pullbacks, well, then you're probably trading a bubble, right? And so look at silver. Are you going to sit there and tell me that this is a healthy uptrend, whereas this is a bear market? Are you kidding me? Right? So people just need to zoom out for a little bit and understand that a capital rotation is all we need from assets like silver and gold into Bitcoin, and that will inevitably fuel Bitcoin to go higher, right? And according to history, it's inevitable. But let's talk about what actually causes this capital rotation, because again, we would like people to be in a position where they are comfortable allocating their capital into risk assets such as Bitcoin, and perhaps even rotating their capital they have in silver and into Bitcoin. Now let's have a look at the Russell 2000. The Russell 2000 here is the US index for small cap stocks, okay? And you might sit there and say, well, what does that have to do with Bitcoin? I'll tell you. Since January 1st, the Russell has almost had a 9% gain, which on an asset like the Russell is good, right? Now, since it is the small cap stock index in the US, this right here does not go up unless the US small cap stocks are performing well. And what I'm getting at is the risk curve, okay? So have a look at this. Hopefully you can see this well enough. Let me increase it for a little bit. So this here is a representation of a risk curve, right? At the very bottom of this scale, we have assets like gold and the S&P 500. These are assets that investors are going to pivot towards when they have a low risk appetite. Now, when do they have a low risk appetite? Well, for example, during geopolitical uncertainty, like we're seeing right now, right? All of their capital is going to flow into assets like gold. Why? Because again, the economy is uncertain. There's geopolitical tensions, all this stuff that can affect assets like crypto in a very aggressive manner. And so they would rather allocate capital towards the safe ones, right? Fair enough. What comes after that is singular stocks, right? Such as Nvidia, Apple, Microsoft. That's sort of the midpoint of the economic cycle. That's when we see a capital rotation into assets like this. Now, later on, right, we typically see small cap stocks rally when the investor risk appetite is high. So that's later in the economic cycle. And what's next in line is crypto, right? That's the extreme risk appetite. And so the fact that we're seeing, the Russell 2000 rallying as we are right now, that's a great sign that the investor risk appetite is slowly climbing back. And that's when you would get a capital rotation from assets like silver and gold and into assets like Bitcoin. Right, so this here is a great sign because these do not go up unless the investor risk appetite does as well. Right, they just don't. So let's minimize this a little bit again. What do you think of the potential wars? Do you think they will create uncertainty in the markets if they get worse? Yeah, absolutely, man. But wars are short term, and I see a lot of people. I'm sure you're talking about specifically Greenland here, right? And I see a lot of people comparing that to Russia, Ukraine. It's just not the same thing. First of all, I personally do not think that that Trump will actually attack Greenland. I just don't believe that will happen. Now, the expectation that it will can impact crypto negatively, but it's short term. All of it is short term, right? It is short term, and again, it could cause uncertainty. And that could negatively affect Bitcoin just like it did in 2022 when Russia invaded Ukraine. But I mean, look at the bounce back, right? So again, first of all, I don't think a war is about to break out. I really don't. Secondly, it would be short term if it even were to happen, right? So you could see, an extra 30% dump on Bitcoin perhaps. And what should you do then? Well, you should buy more and view it as an opportunity, right? So this stuff here is short term. And I do not think a war will happen. But of course, it can create geopolitical uncertainty, and then investors are probably going to pivot towards assets like gold and silver, right? And another thing I want to talk about, which I've also seen on Twitter a lot, is the United States 30-year government bond yield, right? It's going parabolic here. So since the beginning of 2026, it's been going parabolic, and this is negative for assets like Bitcoin. And it's not the only one. I mean, have a look at the Japanese government bonds, right? The 10-year yield. This is actually not only the 10-year yield, it's the 20-year yield, the 30-year yield, and the 40-year yield, right? They're all going parabolic. And this is not good for assets like Bitcoin. Why? Because when assets like this become attractive, right? Why would people choose to put their money in assets like Bitcoin when they can get a great return, almost risk-free, in these assets here? Right? So it's not super positive for Bitcoin that these are going up. But again, midterm for Trump, I do think personally that he wants this down. But we'll see what happens. No matter what we're talking about, right? We can talk about the yields, the bonds, whatever. The thing that we want is the ISM PMI to expand, which right now it isn't, right? This is what has led people to believe that a 4-year cycle even exists, okay? So the ISM PMI moves primarily based on two things: new orders and more productions, right? And again, as you guys can see, this is what's been behind every Bitcoin bull run, and this is, you know, why people believed in a 4-year cycle. They pretty much just believed in the business cycle, right? And this starts expanding once we cross 50. So it has a threshold of 50. Below that, we're in contraction. Above that, we're in expansion. So what we need here is something to cause the PMI to go from contraction into expansion and start the business cycle, which will inevitably, just like history shows us, start the Bitcoin bull run, right? But what could potentially, you know, cause new orders and more production that would make the US ISM PMI go into expansion? Well, I'll tell you, as you might have guessed. Let's see this here. Supreme Court. Let's see, Polymarket. It's probably the most accurate representation. So right now there's a 31% chance that the Supreme Court is going to rule in favor of Trump's tariffs. Now, let me tell you this. If they rule against them and even ban them, that would significantly impact the US ISM PMI, or could impact the US ISM PMI, right? Because again, that would inevitably increase new orders and therefore, you know, cause more production. But that's not the only thing. That is not the only thing. Because what could also affect the ISM PMI is rate cuts, right? Rate cuts would inevitably increase the ISM PMI, right? Borrowing becomes cheaper, which equals more spending, right? But right now, the interest rates are sitting at 3.75%. And so a lot of people don't believe that we will get rate cuts. But let me tell you this, which a lot of people don't think about. First of all, the inflation rate is sitting at 2.7%, right? Now that is if we don't look at the true-flation, because the true-flation is sitting at 1.42%. That is crazy low, guys. But this one here, right? The inflation rate is getting closer and closer to their baseline target of 2%. Now, what does that mean? That gives the Fed room to cut rates. And so, you know, a lot of people are pricing in about 1 to 2 rate cuts in 2026. But a guy that isn't is Donald Trump, okay? Because Donald Trump wants the interest rates. See if I can find it here. Near 1% and maybe even lower than that. And he's constantly pressuring Powell to cut rates. Now, again, guys, Trump does not have any direct influence on the Fed, but what he does have is pressure, right? He can put a lot of pressure on Powell's shoulders, and he can, put a lot of pressure from the media side of things too, and so that could potentially, have an impact or an effect on Powell's decision making. I'm not saying it will, but it can, right? And not only that, I want to show you guys this, because what a lot of people don't think about is the fact that Powell's term expires in May of 2026, right? That means Donald Trump can now choose another chairman. Now, guys, what do you think happens, right, if Donald Trump chooses a new chairman and he wants interest rates at 1% or lower? They're most definitely going lower, right? They're most definitely going a lot lower. And so this would inevitably be massive for the US ISM PMI. And then you could talk about, oh, what's going to happen to the inflation, etc. But again, that's a longer term problem and could in fact also end up benefiting Bitcoin in the long run. So in my opinion, 2026 is looking great despite all these yields rising a lot, right? And even just the technical analysis looks amazing as well. I mean, this here is a 90-day EMA. Have a look at 2023, the last time we used this as support, and the stock RSI dipped below 10. We had a massive run. We're seeing the exact same thing now for the first time since 2023. Now, again, this here without the macro environment is nothing, right? But with the macro environment taken into consideration, this right here becomes useful. Do you have a specific target for the PMI or only above 50? No, I don't have a target for the PMI. I just want it above 50, right? I want it to go into expansion and then continue expanding. And in my opinion, there's a legitimate chance that can happen in 2026, right? and not to talk about the global liquidity, right? Actually, I completely forgot this chart. Not to talk about the global liquidity. Have a look at this, guys. So the global liquidity, right? Historically, every single time we make a new high, right, a new all-time high on the global liquidity, what follows is crazy price action on Bitcoin. Obviously, it's going to directly impact Bitcoin, right? Because again, global liquidity goes up, more money circulating, more capital potentially flowing into Bitcoin, right? And so what we've just seen now is a new all-time high in the global liquidity. Right here, as we bottomed in, we got a new all-time high, right? Same thing happened here in February of 2025, and that's when we went and made a new all-time high. So why are we not just immediately skyrocketing if global liquidity, as it is, just continuing higher? Well, because there's a significant delay from money entering the economy, right? And that money flowing into Bitcoin. Now, why is that? Well, because of the risk curve. So the capital that flows into the economy is going to go into gold in the S&P 500 first. Then it's going to go into the singular large cap stocks. Then it's probably going to go into, the mid cap stocks, right? And then it's going to go into the small cap stocks, which is exactly what we're seeing right now with the Russell 2000 right here. And then it's going to hit crypto. And this is the delay right here that we can take advantage of, right? Because if there was no delay, then we would pretty much be late at all times. But because of that delay, it allows us to invest before the money hits crypto, right? And all you have to do is understand investor risk appetite, which you will if you understand the risk curve. And so based on all of the stuff that we're looking at here, guys, that's why I'm currently long Bitcoin, and I will continue to buy more even if we dip further and further. So yeah, that's pretty much why I remain long. Again, there's a lot more, that we could look at. But yeah, let's look at some intraday price action. That's where the fun is, right? So actually, I'm expecting this week to be bullish, and let me explain why. Let's jump to a weekly time frame. What we're looking at here with this weekly candle, right, is what I like to call an open, low, high, close. So let me explain that concept. This is a weekly candle. Now, what stands out about this candle compared to all the other ones here? It's quite obvious, right? We've got no high. There's no high on this candle. There's no wick to the upside yet. And if we look at literally every other candle here, they all have wicks to the downside and wicks to the upside. But this one doesn't have one to the upside. And that indicates that we're going to get a rotation higher to put in that high that we haven't yet. And so that's why it's called an open, low, and then a high close, right? So I also set this in my private community, by the way, which you can join for free, that I'm expecting a rotation higher. And look what we're getting right now. A rotation higher. So could this potentially be a sentiment shift here? Yeah. And my next target here, intraday wise, is probably going to be this 4-hour gap that we've yet to hit. So perhaps we could get a long off today. Who knows? Oh, it's actually also a 12-hour imbalance, but we've we've also just hit a 12-hour imbalance, so that's a little bit unfortunate. But this could be a target for today or tomorrow. If you want to learn more for investing or trading, do you have any suggestions where I can learn? I mean, listen, here's the thing, right? The information is out there. It's not like the 80s where you had to borrow books or buy books and learn the hard way, right? No, the information is out there. Now, of course, I'm going to recommend myself. I've done this for damn near a decade now. And I have a community that's entirely free, right? So if you want to join that, well, then feel free to do so. But again, all the information that you could possibly need is out there online. We also have a YouTube channel where we publish stuff, weekly. So that's also a place to start and begin. Mostly focused on trading, though, intraday trading, whereas less on the investor side of things. It's a little bit more boring, right? Yeah, I really would like to see a rebalance towards this 4-hour gap up here, but the problem is we've just hit that 12-hour imbalance. Had I known that, then I would have probably looked for longs until then. But so far 2026 is going phenomenal. Been crushing it. Actually, we haven't had a singular public loss since the opening of our community, which is nuts to think about. Well, I haven't. And 2026 is really off to a great start. Here's the thing, right? The ideal scenario for anyone is to be able to trade and understand, long-term investments. Because in bear markets and in choppy, consolidating, boring markets, as a trader, somebody who understands intraday trading, you can still make money. Whereas if you're an investor, those periods, inevitable periods are quite boring. Have a look at this here. The exact same setup that I used to go long here on a daily time frame just appeared in the 5-minute time frame. Actually, exact same. So on a daily time frame, I longed the entire daily range from this point forward, and we just saw the exact same pattern here on a 15-minute, right? Dipped into the golden zone and then continued higher. Let's see. Do we have any? We have a 30-minute imbalance here. That could actually be a short-term target for a scalp after hitting that 12-hour. We're also seeing just no displacement above the high here. So what I'm thinking is we could see a potential run down towards this 30-minute imbalance here. But also pretty dangerous considering Trump is now talking. Actually, I'd probably advise against intraday trading while this guy speaks, because you really never know. You really never know. And this is what I was talking about, right? Have a look at this. Right, we ran up, came down, retested the golden zone, then exploded higher. Exact same analogy here on the daily time frame that made me long this from a technical point of view. So interesting. That's what I keep telling people, right? A lot of people I get a lot of DMs from people asking me, oh, does this work, on a 5-minute time frame, and does this work on a 15? Guys, price is fractal, okay? If something works on a daily time frame, it works on a 1-minute time frame. Unless you're using some HFT algorithm or some crazy complicated arbitrage strategy, generally speaking, a strategy can be applied to absolutely any time frame because price is fractal. So we have a trading range we can work with here, right? And it's pretty much the range you're looking at here. This being the range high and this being the range low. Now the question is, where are we going to go, right? And we can zoom in all the way down to a 1-minute time frame to get a better understanding of exactly that. Like, for example, this could potentially be an internal market maker sell model. What is that? I'll show you. So this here being what we call the buy side curve, and then this here being the sell side curve, forming one consolidation, preferably another one, before hitting the internal lows here. This could be a potential scenario right now. But again, we're gonna have to wait. We're gonna have to wait it out. What do you think of other coins such as Ethereum, Solana, Link? I hold, a good amount of my portfolio in both Ethereum and Solana, and I do see them both going up long term. But again, my focus right now is primarily on Bitcoin, because if that's not going to move, then I don't believe altcoins will either. Again, why? Let's go back to the risk curve. Right? This risk curve can literally tell you when to buy things and when not to. I'm telling you guys. If you understand the risk, right, the risk sentiment and investor risk appetite, you can quite literally invest with ridiculously high accuracy. So if we say Bitcoin sits here on the risk curve, right, those two sit up here, right? And so with the current environment and Bitcoin barely even moving, it's probably going to take a while until altcoins start moving, right? So for that reason and that reason alone, I'm not, betting super crazy amounts of money that those are going to go up significantly anytime soon. But long term, of course, I remain bullish on altcoins as well. Well, certain altcoins. Would you hold any of them rather than Bitcoin? No, absolutely not. I mean, absolutely not. Bitcoin is my favorite asset to trade, and it's also what I recommend people to invest in. Of course, it depends on your risk appetite and your financial situation and everything. You're not going to get, life-changing returns investing in Bitcoin with a regular salary. But it's a great tool for, like, as a substitute for a savings account, for example, right? And obviously, if you look at traditional assets, Bitcoin is just outperforming them by a mile. Even gold and silver, even though people don't think so because of the recent pump, but it does, historically speaking. So no, I would never prioritize any of those over Bitcoin. I think Bitcoin should always be sort of the largest part of any investor's portfolio, and then altcoins you can dabble in after that's taken care of. Again, just like how you were taught, hopefully in school, right? Depending on what you studied, is risk diversification, right? You don't want to put all your eggs in one basket. And so I like to view Bitcoin as sort of my safe haven, right? People use gold and silver as their safe haven. I use Bitcoin as my safe haven. And then I can allocate, more risky capital towards all the other coins: Ethereum, Solana, Link, whatever, Ondo, Sui, all those altcoins. But generally speaking, no, I think the majority of your portfolio should be allocated towards Bitcoin. Okay, so on a 5-minute time frame, I'd like to see this here get inversed. If we close below here in a minute, then I'm potentially looking to short towards the equal lows that you're looking at here, and it's also a 30-minute imbalance that we haven't touched yet, right? and a lot of people, often ask me, why are you always targeting imbalances? In my opinion, you should prioritize imbalances over liquidity. Again, guys, typically the market does one of two things. Either it seeks liquidity or it fills imbalances. And from my experience, imbalances are just higher probability. I mean, let's just have a look at this leg that we're looking at here on a 30-minute time frame. We had an imbalance here. Price rebalanced towards that, so you could have used that as a target. We had another one here, obviously that got rebalanced towards as well. Then we have one large one here that got, immediately rebalanced to. We have one here that got immediately rebalanced to. We have one here that got immediately rebalanced to. So whenever you see these gaps in the market, well, then that is a probable target. And I actually do oftentimes prioritize that over regular liquidity. But again, a game of patience here. If I can just get another sort of displacement leg below this low here, then we could potentially start looking for shorts. I didn't get the closure I wanted. Ideally, we closed, significantly below the imbalance here, but we didn't really. Minor close. What about you guys? What do you guys hold? What are your thoughts, long-term thoughts on Bitcoin? Are we going lower? Are we going higher? You can also scroll Twitter for a while. Oh yeah, I don't know if you guys have seen this, but I posted a video on Twitter not too long ago, and it basically shows the historical correlation between Bitcoin and correlated assets. So this basically shows Bitcoin against things like the DXY and the rates. Obviously, they're inverse on this chart, and small caps and all that stuff. And never, basically, have we deviated this much from the correlation, right? And I can tell you with nearly 100% guarantee that we are inevitably going to catch up. Again, this is a matter of investor risk appetite, and eventually Bitcoin will catch up. Just something interesting that I noticed. What's up, BNO? What's up, Legend? Lower? I respect it. Just like most people. I feel like the opposite of Michael Burry, bro. I really do. Whenever I'm right now, and again, guys, I'm not a Bitcoin maxi, right? I'm not delusional. I just respond to what I believe the data is telling me. And so if it's bearish, I'll short it. If it's bullish, I'll long it, right? But right now, I feel like the opposite of Michael Burry, meaning I'm the only bull left. I feel like everyone has turned bear now. So what's the reason, why are we bearish? So stuff like this, right? We see this nowadays. Even if the total Bitcoin supply costs $25, I'm not buying it. It won't do anything good. Warren, come on. Look at this right here. So during the speech that I was showing earlier from Trump, he ended up saying, which is not the first time he says that, right? I'm also working to ensure America remains the crypto capital of the world. And that's precisely why we're seeing a pump now. Right, so ever since he started speaking, we've just been running higher because of stuff like this. But again, and we have even Secretary Scott Bessent here. We're removing all regulatory obstacles for crypto. Actually, let's talk about that for a second, right? Because in my opinion, this might be the biggest catalyst that we're going to see going into 2026. And that's the Clarity Act. Now, the Clarity Act will essentially regulate crypto a lot more. It will remove a lot of the gray areas that crypto is currently operating in. So first of all, it would get rid of a lot of the manipulation that we see in crypto, right? Secondly, it would increase regulation. And I know a lot of Bitcoin maxis out there are going to tell me, oh, well, you know, the Clarity Act should never happen because crypto is about privacy, blah, 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 blah. Yeah, bro. But a Clarity Act or any regulation is not going to change the underlying network of Bitcoin. It's just not. And that's what people just can't fathom. Regulation doesn't mean that crypto is going to turn like into a government asset. It's just never going to happen. We're always going to have offshore exchanges. We're always going to have projects that's going to prioritize your privacy. You're always going to be able to do these decentralized exchanges, right? And transactions. So it's a stupid comment, really. Why this is bullish, I'll tell you why. Let's look at the pension sector evaluation. Evolution. Am I tripping? Is that not a word? Okay, so the pension sector is a $70 trillion industry. That is a significant sector, right? And it's exactly why the Clarity Act can be so great, because it allows sectors like the pension sector, the insurance sector, and even the banks to adopt Bitcoin. But right now they can't legally because of its lack of regulation. But the Clarity Act would allow them to. So suddenly we open up for unfathomable amounts of institutional capital, right? Such as the pension fund or sector, which is valued at $70 trillion, right? And then we have, let's have a look at this. And we have, you have JP Morgan, Bank of America, Citibank, Wells Fargo, right? We have all these large American banks that are now going to be able to allocate a lot larger portions of their clients' portfolio towards assets like Bitcoin because of the Clarity Act. Right now, yeah, they're dabbling in crypto, surely, right? But do you seriously think that they're, allocating a significant amount of their clients' portfolio to an asset that's just not regulated? No, right? No. So we are just going to open up for so much institutional capital. People can't even fathom it. But the only thing people are focused on is, oh, bro, regulation is bad. No, it's not bad at all. In my opinion, largest catalyst for 2026, I'm telling you. And again, guys, please be careful with who you listen to on crypto Twitter. Why? Because right now, for example, it's incredibly beneficial for KOLs and influencers to be bearish. It just gets views, right? And people are just going to tell you what you want to hear. That's what you have to understand about crypto influencers. They're never going to tell you their actual opinion. They're going to tell you what they think you want to hear. And that's why you see crypto being incredibly bullish when it's easy and bearish when it's easy. What I mean by that is this. During periods like this, right? People on crypto influencers are immediately going to switch into being bearish. They're going to be bearish right until this point here. Then they're bearish. They're probably still bearish here. As soon as we get a candle like this, boom, they turn bullish. Why? Because they're afraid of being wrong. They're incredibly bullish here, right? Slightest sign of bearishness, they turn bearish because they're afraid of being wrong. They're afraid of losing their affiliate commission. They're afraid that you're not going to buy whatever they're selling. So you really have to be careful with who you're listening to because they're just going to tell you what you want to hear. And that's the end of it. And if not, they're going to base, years of price action on random historical patterns. How many times on crypto Twitter have you seen this exact chart? Let me show you. How many times have you seen this chart on crypto Twitter recently? I mean, I've probably seen it 100 times in the last week. So a double top, right, is what people seriously sit there and think caused the largest crypto crash that we've ever seen. No, that's not at all what caused it. right? What caused this crash was a bunch of crypto companies going bankrupt, which creates a lot of fucking uncertainty and obviously a lot of outflows. That's what caused this crash. It's not some random double top. Do you think a double top is the reason why we're selling off now? No. So don't be very careful with who you listen to, okay? Always pushing out negative comments. Well, that's what I'm telling you, man. Like, you gotta be careful. That's the Coinbase CEO. Nice. Look, Senator Cynthia Loomis. She understands it, guys. Look at this. Right on, Mr. President. It's time to get the Clarity Act across the finish line, guys. I'm telling you, if this passes in 2026, you're going to regret not buying. That's my opinion, really. And again, I'm not one of these guys that are going to tell you what I think you want to hear. I'm going to tell you exactly what I believe based on the data that I'm given. And I'm always going to remain that way. I'm a very data-driven person. Again, my background is stocks, right? That's just part of my anatomy. And I'm telling you guys, just watch, okay? Refer back to this stream probably later next year or later this year and watch how many people that were incredibly bearish during this run, during this small pullback here, that are now going to turn bullish and say, oh, I always believed, you know, I told you guys it was going to go up. No, you didn't, bro. You were bearish when it was easy, and now you're bullish because it's easy. Facts and data over emotions. That's what I'm talking about. That's what I'm talking about. And a lot of people like to say, oh, Bitcoin is a speculative asset. It's 100% driven by emotion. No, the hell it is not. Speculation is the reason why Bitcoin exists, but macro is what makes it move, right? Guys, Bitcoin is a $1.8 trillion asset. It's not going to move primarily based on what people are feeling, like random people. It's going to move based on the underlying macro environment. Now, does emotion play a role? Yeah. But it's not the main driver for a $1.8 trillion asset. It's just not. Not to speak of the tax returns that we're going to see later this year. I mean, Trump even said, let's see if we can find it. Well, not that. Yeah, look at this, right? So the tax return season in 2026 are projected to be the largest ever. Donald Trump publicly said that families were going to get save between $11,000 and $20,000 in 2026. What do you think happens if millions of people are going to save that much money? They are going to go parabolic, right? They now have capital to spend on assets like crypto. And what's also going to go up, right back to the risk curve, the investor risk appetite is naturally going to go up, right? So we just have a lot of things lined up in 2026 that genuinely makes me believe that we're going to go much higher. I have so many people telling me that I'm delusional, I'm this, that, and the other. But I'm telling you, I'm going to keep expressing my opinion because I know that it's based on what it needs to be based on and not random analogy. Oh, this is also pretty interesting. I don't know if you guys know, but the mining cost is actually a pretty significant support level for Bitcoin. And we're actually very close to it. I mean, have a look at this, right? 2023, we dipped below the mining cost. We actually did so also over here. I don't know if you guys can see it. Can't see it. In 2020, we also dipped below the mining cost. So it's happened twice. both times it sent Bitcoin parabolic. Obviously, it was in combination with a bunch of other things, but the reason for that is because miners start losing money when Bitcoin trades below the cost of mining, right? So it's a magnificent support level, and we're approaching it right now as we speak. That's what I literally just told you guys. After market structure passes, banks will get fully into crypto. And that's what I meant, right? All these banks that people think are in crypto, they're not actually in crypto. They might, allocate a tiny portion of their client's portfolio to Bitcoin, but it's just nothing compared to when it gets more regulated. But yeah, we'll see. Again, all the stuff I'm saying is obviously also just my opinion, right? Again, anything can happen, you guys. I mean, I'm not in control of the market, right? I'm not a wizard. I'm not a magician. All I can do is form an educated opinion and then hope for the best, just like anyone else. Nobody truly knows where the market is going, right? We don't know if it's going to go up, down, or sideways. We just don't. We can make educated guesses, and then over a prolonged period of time, we can, have the probabilities be on our side. And that's the game of trading and investing, right? It's a game of probabilities. You're going to have some losers, you're going to have some winners. But at the end of the day, if you've done the due diligence behind the system that you're using, then you're going to come out profitable because you're trading with probabilities, right? Not certainties. It's impossible. X influencers, down with them. No, I think there are certain good ones in here. Let me show you some of my favorite. Like, for example, we have this guy here, phenomenal guy. We have Julian Biddle. He's the head of macro research at Global Macro Investor. And this guy knows what's up. This guy knows how to look at data, and he expresses it in a very detailed manner on Twitter. So these are the types of guys that I would be following. And of course, myself as well, right? But I mean, just really be careful and picky with who you decide to listen to. And also, don't forget, guys, do not forget how much your emotions play. how big of a role your emotions play when it comes to the outcome of both, your investments and your trades. There are countless of people that have lost so much money because they listen to other people instead of their own analysis, right? And that's exactly what Twitter can do for you. Because if you scroll Twitter for 5 minutes, I can guarantee you're going to find someone that's bearish, right? And then that's going to affect your subconscious mind, and you're now going to double guess or second guess, your strategy, right? And so it's important that if that's the case for you, you jump off of Twitter and you don't look at other people. Same with TikTok, same with Instagram. Trade and invest based on your own educated analysis, and then ignore everyone else. Because at the end of the day, nobody's right, nobody's wrong. There's no system that's better than the other. I always say that the trader is the person who qualifies the profitable system. It's not the profitable system that qualifies the trader. Like, for example, let me show you. This guy. It's people like this. Right? This guy has now for I see this guy so much on my Twitter. And he's just crazy. Every other day he says some stuff about Bitcoin going to zero because of this. So this guy bases his entire analysis on this. I mean, and people believe this stuff, right? People genuinely believe this stuff. I mean, have a look at this. Do you see how undervalued gold is against gold? I mean, it's historical. It really is. And that's the problem with people in crypto, right? They complain all year long that they've never had a chance to buy crypto at a reasonable level. So they're never going to make any gains. But whenever the market gives them the chance and opportunity to do so, they ignore it because they're too scared. Right? I mean, literally, no matter, unless you bought at 125,000, you have made money. That's what people don't understand. You are in profit, right? And so that just goes to show that history has always been right. No matter at what point throughout Bitcoin, nearly, right? Unless you bought at the very top, you would have been in profit. And so what do you think is going to happen, 5 years from now? Do you seriously think we're going to be lower than we are now? No way, man. So the worst thing you can endure, or the worst thing that can happen, is unrealized losses. And who the hell gives a shit about unrealized losses? I mean, come on. Right? So it's really, it's really about locating your balls and then understanding that if you don't take action when the market tells you to, you're just not going to make any money. That's just the end of it. Right? Because I hear the same thing every time. When Bitcoin does this, people are screaming, oh, I didn't get a chance to invest in Bitcoin. I just haven't been able to buy it when it was low and now it's too high. Meanwhile, they didn't want to buy during the sell-off that happened here because they were too scared it was going to go to zero. Same thing here, right? The same people that were too afraid to buy here and said they were going to wait for a dip. When they finally got the dip, they also thought it was going to zero. And look what happened. Same thing here and the same thing now. The same story on repeat, but people keep making the same mistake. Oh, this is also interesting. This is the Bitcoin ETF cost basis. So it's only happened twice because ETFs were approved in 2024. But this is what I like to call the institutional support level, okay? Or the fair value of Bitcoin. And look at where we are now. Like, we've just tapped the ETF cost basis. Last time this happened, Bitcoin exploded over 100%. Right? And we're there right now. I mean, there's so many things that are just pointing towards a bull run. Now, of course, I'm not blaming anyone for being bearish. Of course I'm not. Have a look at this also. This is Bitcoin relative to gold. Look at this. I mean, if that's not undervaluation, I don't know what to tell you. Right? And so people here waiting, screaming for an opportunity. It's here now. This is what you've been waiting for, right? This is what you've been waiting for. And also this one. This just shows the capital rotation that I was talking about earlier, looking at the risk curve, right? Is actually a thing. Obviously it is, but maybe some people don't believe it. So this is basically a visual representation of how Bitcoin follows gold. So I have a look at gold down here at the bottom. Look at how the gold run starts, right, in 2016 and ends right around 2017. As soon as this ends, right, a few months later after this ended, the Bitcoin bull run began. Same thing here. The gold run started late 2018, ended in 2020, 2021. And look at this. As soon as the gold run ended, the Bitcoin bull run began. Why? Because of the capital rotation going from safe haven assets such as gold and into Bitcoin. And this here is literally all the proof that you need, right? I'm taking notes. I appreciate you being here, brother. Let's have a look at the economic calendar, because I think we have unemployment claims tomorrow, if I'm not mistaken. Yes, we have unemployment claims tomorrow. Now have a look at this, by the way. Have a look at this. The unemployment rates have been beating expectations basically since December 24th. Yeah. So the last 1, 2, 3, 4 unemployment rates have beat expectations, right? They've come in lower than forecasted, which is a sign that the labor market is growing. Right? That's actually a great sign that the labor market is growing. And look at this. I mean, even the final GDP quarter over quarter, the last one in September, beat forecasted by quite a bit, right? Now, tomorrow we will see what it will be, if it will beat expectations again. But I mean, have a look at this, right? The labor market is growing. The GDP seems to be growing, which means it won't be long until we get that investor risk appetite back. Right? And that's not to speak of all the other things that are likely going to take place later on this year. So, I mean, I just don't see a reason to be bearish right now. I know a lot of people are talking about a recession, right? But first of all, you have to understand this. People always talk about a recession. People are always afraid that we're in a recession, and there's no data backing it up. They know nothing, really. Like, if assets start trading a little high, they just instantly think we're in a recession. Have a look at this. Rotating back to Julian here, because he put out quite an interesting post some time ago of the Cass-Freud index. Let's see if I can. Let's see if we can find it. Perhaps we just can't. I'm looking for the Cass-Freud index, and I know he put up a chart of it. Am I bugging? Here it is. So this is the Cass-Freud index, right? Now let's have a look at the other recessions that we've had. 2020, we had a smaller recession. Then we had 2008, obviously, and then 2001, 2002. Now have a look at where we are now. We're literally below the levels of 2020. And this just won't happen. We will not be on our way up like this if we were entering a recession. If anything, we are coming out of one. I mean, as he said himself, slow down? No way, man. Right? So people talking about all this stuff as if we're going to have another dot-com bubble. I think it's delusion, really. I don't think at all it's comparable. I do think it's possible that we hit this imbalance here very soon. Oh, we now have an hourly imbalance here. I didn't actually see that. Let's see. If we hit this, I'm not going to look for shorts, but if we get a pullback before we hit this here, I'll short it. But I don't think that will happen. I do not think that will happen. You have a reclaimed order block sitting right in premium. That would actually be quite the short. Yeah, I think we're just gonna run that hourly imbalance, and that pretty much marks it for me. I really would have loved a short here, man. This one, for example, looked amazing. The optimal trade entry that we're looking at here. I mean, have a look at that. How beautiful is that? Give me 1 second. Let me run down and grab something to drink. All right. We are back. Now, again, I don't think it will happen, but in case it did, I would really want to short towards this hourly imbalance because there's pretty much nowhere we're not going to hit it, as I have been saying for quite a while now. If we can get a dip to the premium of the range, I'll short it for sure. Like that right there. I don't think it will happen, but in case it does, I wouldn't mind shorting this. Fingers crossed. I don't know. We'll see. We'll see, because we're, probably going to run the gap before we get a chance to get filled here. If we do end up coming up here, I don't mind shorting it. We have a lot of latency here. Let's see. Let's see. We have 15? Not yet. This closes in 1 minute. See, this would just be super optimal because of the 12-hour gap and then a rotation into the hourly. I mean, textbook, really. see if we're gonna hit this, then I think I'll call it a day for intraday trading. Not worth it. Also, just generally pretty risky considering Donald Trump was speaking. I don't know if he still is. Unemployment claims tomorrow, etc. Yeah, there we go. Target was hit, unfortunately, without us being able to get filled. I would have loved to have taken the short up here. Very easy to say in hindsight, of course. But yeah, ladies and gentlemen, I appreciate you, for stopping by. Hopefully you learned a thing or two and at least got a better insight to my idea about crypto and Bitcoin specifically. So that was it for today's live stream. Again, we covered a good bit. We covered all the, well, not all, but a lot of the underlying macro environment and the reason why I went long to begin with. And then of course the intraday trading. Obviously we didn't actually end up placing any trades, but that's fine. We're not always gonna have those. We're not always gonna trade. So yeah, thank you for joining. Again, we have a free community full of all of my systems that I've used since the beginning of times. An entire video course, an ebook, coaching calls, you name it, we have it for free. So if that is of any interest, again, I would love to see all of you in there. So if that's of any interest, check out the link down below. No problem, B&O. I hope you have a great day, and I will see you all in the next live stream.